Today I'm just going to share about the basics of stock market, part one. Yes, so many analysis and everything I've done, but the basics about what is stock exchange, what is stock market, and why the hell companies are coming into stock market, right? Because there are so many IPOs which is coming in, and people are thinking, why should they come in? Why the so many IPOs are getting launched? Right, so all these basic questions about stock market are still left unanswered, and I thought let me do a video on that. So, hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan. And today's topic is on basics of stock market, part one. So, what are the things you are going to get covered in today's topic? Is let me show it in a mind note format so that you all can pick it up, and I'll share a very simple way to understand about stock market. Okay, just a minute. Okay, I did the mistake. Okay, hope you are able to see this part. This is the mind node, we call it. This is a software where it will help you to learn in a point by point format, right? So this is what we are going to see today. So all these things which is available. So hope this is clear. And first is company formation. Why the company is getting formed. This is the most interesting part and needed for why someone needs to form a company, right? Let's take the example of Hindustan Unilever, right? HUL brand, the teas, the three roses, three coffees, and as well as the hammam soap. All these are brands owned by Hindustan Unilever. And the company which was formed in I think German, some European countries, Sweden or something, I'm not sure, France or Sweden, not sure. But it was formed, Unilever is a parent company, and in India it is called as Hindustan Unilever. Okay, so for example, in the beginning in 1960, that company wouldn't have just started manufacturing tea or something, started trading into it, and they thought they are doing business only in South India, and they want to expand to all across India. They want to go across east, west, as well as northern part of India. And this is before coming into stock market. But before that, while you are trading a tea or trading in any soaps or whatever, you need to form a company such that is called as private limited. So Hindustan Unilever, so that is a company which was formed. It's a private limited company, and once it is formed, they can start trading teas, or they need to get classified as a FMCG company, so that any related products they will be able to sell. So this is the first basic thing about the company formation, the private limited. And each company will have a shares. For example, when I started, 1 lakh rupees was the investment I made into my company in 2017, and that will have a default face value of 10 rupees. The default face value. So 1 lakh of investment divided by 10 rupees will come around 10,000 shares will be there in my company. My company name is YMM Financial Services Private Limited, right? So this is the company shares. And when I want to, and as and when in the last 5 years, company has grown, and now the income would have been around 10 lakhs, for example, right? So the face value will remain the same, but the book value, based on the operations, based on the cost involved, and based on the office setup and all these things involved, the book value of the company will be computed by the chartered accountants, and they will come to say that the book value of the company is around 50 rupees, and now the total share value, say 100 rupees, let's take 100 rupees, and the total shares involved is 10,000 shares, and now the total value of the company comes around 10 lakh rupees. That is the reason the book value comes around 100 rupees. So that calculations and things will be taken care by chartered accountants or the people responsible for it. We don't need to worry about that. And why should I come? And it's already going on. I am in southern part of India, right? I started the example with Hindustan Unilever, and I'm sharing about my company because so that it's easy to explain. And in the last 5 years, everything has improved. But I want to improve, because right now I'm doing business only in Chennai, Tamil Nadu, as well as in certain parts of Karnataka, Bangalore, for example. And I want to go to Kerala, go to Hyderabad, and also not Hyderabad, Andhra Pradesh, Visakhapatnam. I mean, all the areas of Andhra Pradesh, and also across India. So if that is the case, I need money, because with my limited source, it will take lots of time period for me to uh, earn the money and then expand across all these states. So the better option will be to get listed, either borrow money from the banks. Another option is be compliant, because in the last 3 years my revenue has increased, my sales and everything has increased, and it looks good. So if I go and ask the public, I will get money. So that is another way. That is called as stock market initial public offer. That is the reason you see now the market is positive and it is going up like anything. Any stock, any new company getting listed, is so positive, and they are seeing 20% to 30-40% returns in a span of on the day or in the within a 1 week or 10 days. So this is our market. People come into stock market, and similarly, even if I get listed, say at the rate of 100 rupees, on the day of listing, if 120 rupees, if the stock goes up to that level, automatically you will be getting 20% returns on day one. This is a reason, not for listing gains, this is the reason most of the companies get listed, so that they can dilute, they will get the money from the general public. Now from private limited company, my company becomes public limited company. Quarter on quarter, I need to update all the data, so that you are all, as an investor, you are all clear about what my operations are, where am I investing, and how am I generating revenue, what is the brand value creating, and all these things I should be putting up in my annual presentation. And you will get a clarity, should I continue, and you will get, as a retail investor, you will get a clarity, should I continue my investment or not, right? So this is simple, right? Now you learned about initial public offer, and after initial public offer, my company YMM Financial Services Private Limited gets listed in stock exchange, right? And stock exchange is a place where it can be Bombay Stock Exchange or National Stock Exchange in New Delhi, and there are exchanges across Kolkata, Chennai, and as well as Coimbatore, Bangalore, all across India. But all these places were closed off because Bombay was the biggest, and it was started in 1875. So we are the one of the oldest stock exchanges in the world, and it can my company can get listed in Bombay BSC or NSC or anywhere, okay, depending upon where and all I want to trade. And if it has been available in all the places, it is good for the company, because everyone will start trading in it, and the share value starts increasing. And stock market is a place common, and the all the derivatives, including stocks, cash, futures, and options, all these things happens in a common place that is called a stock market. And where the stock market will be done, that place is called as stock exchange. So that is the reason we have Bombay Stock Exchange and National Stock Exchange. And NSE was formed in 1995 after a mishap in Sensex, in Bombay Stock Exchange. Everything was happening in a Harshad Mehta scam, broken up, and because of that, in 1995 NSE was formed and technically advanced. So from that time only, everything got changed, right? So there are two stock exchange, BSE and NSE, and Bombay Stock Exchange and National Stock Exchange. Say you buy the stock in BSE, you can sell it in NSE. You buy the stock in NSE, you sell the stock in BSE. This is what you can do. And the next thing is the biggest difference between stocks and shares. Ideally, there is no big difference at all. Stocks and shares are almost interchangeably, you can say it out. So stock is nothing but a particular set of stocks. For example, large cap stocks, mid cap stocks, that's how we will call it. But individual company, we will call it as shares. LNT shares, ITC shares, Britannia shares, that is how we will call individual company shares. But Britannia stock, we won't call it. So a group of companies together, and those shares are called as stocks. So it's almost like a singular plural, there is no different meaning at all. You can call it interchangeably, and automatically you will say large cap stock, not large cap shares, and you will automatically say ITC share, not as ITC stock. Okay, so that is how market is. And once you start learning, or once you start applying, once you start trading or investing, you will come to know these terminologies by default. And generally, how to invest in stock market, you need demat account. As I said, on the onset of NSE, everything became online. So earlier, before 1995, everything used to be physical. People from Chennai needs to provide the physical paper, sign it up, and give it in Madras Stock Exchange, and the order will be placed in Bombay Stock Exchange, and that is how orders will keep running. And after the online format, automatically everything become dematerialized. Everything is available online, and it started going up. So this is one of the easiest way to start investing or trading in stock market. So this is what it is all about. So investing in stock market is, the demat account is very essential, and it's very simple. You can open it in a day or two, and that is what it is all about. And is it regulated? Yes, absolutely. The absolute regulations about stock market is all about SEBI, the Security Exchange Board of India, where the stock market regulations are being done by SEBI, where automatically they control the selling and buying of stocks, as well as how the regulations are happening, and if there is any mistakes happening in any company, that is being mandatorily followed up. And that's how the S Bank shares, S Bank company issue got broken up in the open market. All these things were happening because of SEBI's intervention. So there are so much regulations, and they say that you need to do this, do that, and every company needs to comply. And that is one of the essential things. They are doing it for the investors like you and me, right? So regulations are very, very strong, and in India, so you can always believe in investing in stock market. And only thing is, you need to find out, am I finding a right company? Am I investing in a good company or not? And this is a most important aspect, how much returns you can expect out of stock market. Generally stock market will give you returns in the range of say, there is no definite range as such, because in the mutual funds there is benchmark returns, but in stock market index funds returns around 13 to 14%. That is the ideal returns. And in the case of individual stocks, it can range from 20% to 40% and even higher. There are cases where individual stocks have generated more than 100% returns. So it depends upon the company you choose, but ideally if you're choosing a value stock, in 1 year timeline you should be getting around 15 to 20%. And if you're able to generate that much return over a period of 10 years, you will be making lots of money. That is very as simple as possible. Okay. And another two important things, why it is going up and why it is going down. And why it is going up, if the monsoon is good, automatically the onset of monsoon is happening on the right day as expected by Indian meteorological department. That gives a almost enough rain for entire India, and because of that rural economy will develop, right? Because most of the India is covered with rural area. And if the monsoon is good, and it can lead to agricultural improving, and once agriculture improves, automatically the money will be in the hands of rural people, and automatically they will start buying more things like FMCG products and all the related products whatever they need. That will help in improving the sales of all the related companies. So and also government relief measures, if anything is provided by government for corporates, most importantly corporates or investors, that will drive the stock market to the new level. And also any positive news for investors community, as I said, corporates as well as investors, it will go up. Investors includes foreign institutional investors as well as domestic institutional investors. All these are important reasons for these are few of the reasons, not entire thing, few of the important reasons for stock market to go up. And why it is going down, and again, if the monsoon is delayed, and if there is a draft year, and that will have a huge expectation on this year rain, and again it will have a huge if the rain is not enough, it will have negative impact on the stock market, particularly stocks related to rain as well as rural areas. And if there is global war or tension like situation, suppose if there is a war kind of situation between India and Pakistan, and suppose if there is a war like a kind of cold war like kind of situation between China and US, which was there last year when Trump was in power, almost it was like a tit for tat was happening between China and US. If these conditions are happening, automatically you will feel that there is a global tension, and you will see the stock market across the world, and that too specifically if US retaliates and if China retaliates, it will have an impact on global stock market, and that will have an effect on Indian market also. And finally, if there is a currency devaluation by any one country like China or any other country, it will have a huge impact on the forex of all the countries across the world, and that may also create a stock market to crash or come down. These are all some of the reasons for stock market to come down. Okay, so generally what we discussed today is company formation, why the company is being formed, and how the company shares are being calculated, and why the company needs to come into stock market, and what is the difference between stock exchange and stock market, the stocks and shares, as well as how to invest in stock market using demat, and finally the three most important points, why it is going up, and why the stock market is going up, and why the stock market is going down. These are the reasons, these are the things we covered as part of stock market basics part 1. And most probably we will cover the remaining things in part 2 and part 3. Please come tomorrow so to see the basics of stock market in my channel Ganesh Santaru. Please do subscribe and share this video with your friends who are not clear about how the stock market is working and why it is going up, why it is going down. So come tomorrow, we will have interesting updates on the basics of stock market part 2. Thank you.